put your mum's tarot cards away because my crystal ball told me that these markets that I'm going to share with you are going to achieve more than 15% capital growth in the next 12 months. And I'm going to reveal every single one for you today.
Serious disclaimer on this one. This is not personal advice. This is not personal recommendations to go and buy there. Do your own due diligence. We are not financial accountants or brokers or whatever the heck are we. Go and do your own due diligence. Go and look into this on your own. Every bit is based off the research you have conducted. I'm going to stress test a lot of this stuff. I'm going to test it for the audience to make sure that you've done your research, but don't just follow us blindly. Yes?
100%. Today is just going to share the locations that we predict are going to be locations to invest in that can potentially get 15% capital growth or more, of course.
Yep.
Like you said, that's the most important part is to go back there and do your own research, okay?
So we are currently investing in a lot of these regions. Some looking to are not investing.
Yes. Some I've put that we're not investing in, but are the higher price points.
Yep.
In capital cities as well for people that are listening to this that want to get into your capital cities or your big metro areas that have higher budgets that are great places to invest. They're actually going to do very well as well and gentrify. Okay.
Let's rock and roll. What are we going with first?
So today's, ladies and gentlemen, I'm going to share 5 regional towns and 5 capital cities that I believe that are going to get anywhere from 15% growth or more in the next 12 months. And what I'm going to divide it up in is 10 capital cities and 10 regional towns for different price points so people can get an understanding of, like if it fits your price back bracket or if you're looking for a property at a lower price point in another area, at least it ticks all those boxes.
Play it home.
Okay.
Let's roll.
So we're going to go with number 1. Okay. And there's no particular order in this. Okay. Of like number 1 is better than number 10 or vice versa.
Cool.
Number 1, we're going to go with Brimbank in Victoria, which is in Melbourne. It's a capital city or capital LGA. And it's a town or, a city that has a medium house price of $740,000.
Cool. The
medium rents are $500 per week. And the yield is 3.5%. Okay. Now, you listen to those numbers for people like I guess our close listeners or people that are clients, they'll say, oh, shit, I'll go buy in an area that's lower price point, a bit more, higher rental return, not as much it's going to cost me to hold the property. But if you're looking for a place that's going to gentrify, change its economy and, I guess the status of it, because we all have those places that have the status quo. It's not really optimal in some areas, you could say.
Yep.
This is a place that it's, the suburbs in there. In Brimbank, you got your Rockbank, Sunshine, Footscray, all those areas there. That place has changed a lot, and I think it's going to change a lot more as the years come on. Cool. There's about $12 to $13 billion worth of projects, okay? And being conservative with my estimations of getting all the jobs that I created and all the data that I've put together, anywhere from 5,000 to 8,000 jobs from the projects that they're putting in.
Yep. Big hospitals going in there.
Yeah, upgrades and airport railway links and all the roadworks and a whole bunch of other things that are going on. There's some places like Sunshine, I think is a really, really great place that can gentrify, putting heaps of work into the city town centre there, and it's got a lot of jobs, big on industries, different types of industry and retail trades. And I think it's a great place that can, if you're looking for that higher price point and you want to get into a Melbourne market, that offers a lot of great opportunities because that's the medium house price is $740, but of course that's for the whole LGA, the council area.
Yeah, there's differs all over the place. Okay, the rental yield concern you at all?
Look, not really. I think a place like this can do quite well if you buy a property that you can put a granny flat on. You can put a granny flat in some of these areas for $170,000 to $220,000, if not higher. If you want to go high end, and you'll get $400 plus a week, maybe $5. Yeah, if it's depending on the size of it and what you do. Good thing in Victoria, the granny flat, if you think it's under 60 square meters, you don't have to get a building approval and go through the whole,
Yeah,
that's right. So I think that's where the rental yield, you can get that 3.5 potentially to a 5 or if not maybe higher percent yield.
That's if you can buy a bigger block, big enough
of course,
land
but you can. There's the opportunities. These areas here, there's some big blocks. Of course, in the Brimbank area, there is those new estates that you probably want to stay away from. But the other surrounding areas or the established areas is great opportunities there.
Cool. Yeah. So place you'd be looking at for your clients or yourself?
For the clients, yes, that want to invest in your capital city, this is a place that I do like.
Okay, cool.
Okay.
On to the next.
On to the next. I'm going to go with a regional town.
Okay.
I'm going to go with a place that I do like called Horsham. Horsham's got 20,000 people. It's in Victoria. It's I guess a place that has a different economy. It's got very, very robust, very strong. Medium house price is $450,000.
Sweet.
$440 medium rent.
Nice.
And it's a 5.08% rental yield. So very healthy.
Yep.
Okay. It's a place that we're looking in. Okay. The approximate amount of money getting spent is around $3 billion on projects, and roughly around the raw numbers of jobs, including ongoing and construction jobs, around 620 to 650. Of course,
So just explain that, sorry.
jobs. How many jobs are getting created
Gotcha.
from construction or
From that
ongoing.
3 billion?
Yeah, from that 3 billion.
Gotcha.
So with that, of course, they'll have a big impact on that size of that town of 20,000 people. It is a great location. It offers a lot of things, very diverse, very strong economy. Listings are dropping and reducing. There is things where you need to be, got to watch out with Horsham, certain areas of flood zoning. And of course, there is some soil issues that do happen out there as well. That's just, like to always give as much information as I can. And that's just because of the soil is very loose or there's something wrong in the soil. So sometimes your foundations can be a bit weak. Cracking on houses and stuff like that, with, when you see cracking in the walls because of movement. We've purchased a lot of properties there, but of course it's something to be aware of as well as an investor going in and buying in a market like that.
Cool. So we are there. You are looking into that. You like the yields. You like what that area is going to do over the next 12 months in 2026.
Yeah, very diversified. Like it's got even the listings and the amount of listings have dropped over the last 12 months. There's been a reduction, and that's about a 45% reduction on listings and stock on the market, which is what we look at for. And then even vacancy rates are very, very tight. So the rental market is in high demand. Not enough rental properties in the market. And if you speak to PMs there, they say, well, we just need more rental properties for our tenants.
Awesome. What's number 3?
Number 3, okay, and we've had a bit of conflict with a few other people out there saying that don't invest in Tasmania.
Oh, yes.
It's a place that you don't want to invest in. But on my radar is Hobart.
Love it.
Hobart is a place we have purchased there. I think with people that have looked into Hobart, there's a lot of works and a lot of things that they're talking about, not this year, the following year, they want to create the new AFL team there and the stadium that they have the vision of creating that new stadium and the AFL team. I think that's going to be a massive contributor to the economy, of tourism and stuff like that, but also people going there to live. And I think it offers a lot of positive things to the economy with not just that project, but a whole bunch of other things with the hospital upgrade and stuff like that. Just to touch on the fundamentals or just some of the metrics here, $955,000 is the median house price in Hobart. The $650 per week in rent. It's a 3.5% rental yield. So nothing crazy.
Okay.
$9 billion of projects coming in, or roughly around 9 to 10. And the rough total of construction jobs can be around 13 to 20,000 construction jobs. And then ongoing jobs, anywhere from 4 to 6,000 permanent jobs, ongoing jobs. So a lot of these projects are under construction at the moment and haven't been completed yet. Some are in an approval phase. But you look at that, we hear about the migration or the population isn't growing and it's nowhere above the Australian average at 1.7%. It's a lot below that. So it means it's not growing. It's growing below the average of Australia, as in Hobart and Tasmania in general. But, these projects will add a lot of value. We know Hobart was the best performing region in 2012 to 2013 to 2018. And I think, it's been dormant for a while, but I think it's a place that, one, it's affordable, got great lifestyle, it's got all the amenities, got strong projects, and not just that, it's got a strong economy. I think 12 out of 19 industries, when you go off ABS data, we rank 19 industries of every single economy in the country. Out of 19, it's 12 industries are greater than New South Wales average when it comes to Tasmania in general.
Okay.
So
can you just break that down a little bit for me? So
Tasmania has 12 industries that are greater than New South Wales.
Yep.
Comparing to New South Wales, I should say. So 19 out of 12, it's greater than New South Wales. So the economy, if we look at New South Wales, we know it's quite strong. It's got, the biggest city there, Sydney, and it's quite diverse. But, I think you look at Tasmania, it's actually more diverse than New South Wales.
So give me an example of what an industry would be, more for the viewer. Like, what's that actually mean? 'Cause that's-
Healthcare is greater than New South Wales. Construction, and then there's, all the other thing, manufacturing, agriculture is very
Gotcha.
big there too.
Gotcha.
So, like, you look at those things, there's a lot of positives there. And, I think people will say, oh, it's an island, it's not part of Australia, or, people make fun of it. It's this small place that doesn't have that strong population, but it's just honestly people's opinion and not looking at the data.
Okay.
Okay.
Cool. So you're happy with that? You're happy with Tas? I know you are. We've got a few properties there, but to actually perform and do 15% plus this year, very confident.
I think it will definitely be one of those ones that's going to do quite well. Yeah. Depending on where you are as well, of course, when it comes to Hobart. Okay. There's all different parts, depending if you're going north, south, west. I think, it's definitely going to be a place that where you put your money is going to be very important in those locations.
Yep.
Not everyone's treated equally, but just looking where the affordability is, where the people are looking in those areas there, it's going to be a place that I reckon will do quite well.
I love it. I love
Okay.
it. Let's keep going.
Next one on the radar, I'm going to do Albury Wodonga. Okay. Albury Wodonga, we know Albury is a place that, is very strong economy. You got the ATO headquarters. You've got the distribution centre for Woolworths. You've got a numerous amount of different types of industries driving it. It's got tourism, big, especially in the Christmas period, like right now and after Christmas. It's huge. You got water skiing and water aqua sports and all that sort of stuff. Median house price, $640,000. Okay. $530 a week in rent, and it's a 4.3% rental yield.
Shit, when were we buying in there? When did we start buying in there?
It's been over 12 months ago in Albury Wodonga.
What would the median house value be then? Well below 500?
Yeah, around that 500.
Yeah.
But I still believe it's got room to grow just because of the amount of projects, over $5 billion worth of projects going in, anywhere from 250,000 to 400,000. Sorry, 2,500 to 4,000 jobs getting created. So I think that's going to have a lot of positive effects on that market. And then migration's actually still up and improving in those areas there.
People moving there?
Yeah, yep.
Right.
So I think with that is the one, you got lifestyle, but also you got opportunity for jobs and high paying jobs in that area for the income. Incomes are very, very strong in Albury Wodonga as well. Okay. And it's already had some pretty good growth over the last 12 months, but I think it's going to continue that trend as well.
Cool. I love it. I love it. So a yes still, client comes to you, you're still happy to buy in that type of region?
Yeah, definitely.
Cool.
Definitely.
You're laying it out. It's good.
Laying it out. Next one, okay, which we're up to number 3 for capital cities, the Blacktown region of New South Wales.
New South Wales again. Yep.
Okay. Now, this is a bit of a higher price point, but at $1.2 million, you can get that's the medium house price in Blacktown, $690 a week in rent. It's a 3%.
Tough yield,
it's a tough yield. It's 2.99 or 3%. This is to rail it off.
Yeah.
But when we look at the amount of money getting spent, $45 to $48 billion. A lot
of money.
Okay, a lot of money. 100 to 120,000 jobs for construction and ongoing jobs. So a lot of jobs. Migration is quite strong. It's improving. Of course, a lot of people moving out there. 1.2 is a very affordable market for Sydney.
1.2 million bucks.
When you really think about it, how expensive that property market is.
Yep.
So I think Blacktown, is once again, it's one of those places that if you're looking for high purchase price, still a great return, you can always add a granny flat as well into something like this and increase that value and return on investment. The rents are pretty strong in Sydney. They've been doing quite well, not going backwards or, retracting, but it's something that you can add a granny flat on and increase some value on that.
Renovation, whatever have you. Okay, so there's ways to get that up. Awesome. Yeah, the yield's low. The yield is low just off face value. Costs you a bit to hold, but okay, cool.
Definitely. And I think it's just those ones that, look for something different. You've always got those, people got a different strategy, blue chip. Okay, and there's nothing wrong with that. You can always diversify, go into, places I've mentioned, Albury, Wodonga and a few other places that you can go around the country, Ballarat, Indigo, whatever it is for half the price. But sometimes people feel like, just going for one big property like that in a capital city is something that they...
It's an easier way.
Way for themselves, and that's their strategy.
I love it. Awesome.
Number 3, was number 3, yes. For regional. Parks, New South Wales. Like this town a lot.
You do, don't you?
I do. I like this town a lot. Medium house price, $440,000. 5.2% rental yield, okay, and $440 per week in rent.
Awesome.
Now, projected pipeline for projects, okay? Now, going off projects that are in approval phase, including, of course, ones that are at construction phase already, $30 billion roughly, okay? So a lot of money getting spent there. 5,500 to 7,500 jobs, including ongoing and construction jobs. For people that don't know parks, it's a big dish. So it's that big dish that I think was in the movies, which Carl, you might be. The dish, the movie, The Dish.
There he is. I got no idea.
It's this those big dishes that they look like when you put on your roof for antenna and or getting reception for TV. It's like that.
Okay.
That's what it's known for. But
that's what it's known for.
That's what it's known for.
Moon landing.
The moon landing, correct. Supposed moon landing. That was it was fake. But anyway, we keep going. With Parks, I think Parks is got the gold mining there as well.
Cool.
And there's a lot of other type of mineral mining there as well. It's not a mining town predominantly. There's a lot of other industries that are driving the economy. I think it's about 14 or 15,000 people in the LGA. So it's on the smaller end.
Yeah.
But it's an area that I think is just going to pop and it's doing quite well. We've been buying there quite some time now. But I think that's going to be one of the places on the radar next year.
And you genuinely believe that the moon landing was not real? That's
Come on, mate. Are you kidding me or what? Anyone here?
Don't go into it.
Just watch the interview of Lance Armstrong and the guys
off.
when they landed on that moon. The excitement on their face was no excitement. Anyway, we can keep going down that road, but
I mean, we can sit here for the next 15 minutes and talk about it, but there's probably regions.
people cry when they win a grand final. There was no crying. There was no emotion landing on that.
Hey,
moon.
that's astronauts for you.
How come they never went back?
Because it's all bullshit. I'm with you. I'm on your side. You are giving away everything right now. You know that.
Yeah, it doesn't worry me.
You comfortable with that?
Yeah, it's fine. It's fine.
When's this going to be released?
Next week.
All good to me.
Yeah? Okay. As long as you're cool. This is years and years of research. You've built your own
Three
research
more places that we're buying in. So, I think we're
So you're holding a few cards to your chest.
Well, no, we're in 15 locations at the moment. So yeah, parks. Okay, so
You've spoken about
I do like parks a lot.
What's driving the economy there? Outside of the dish?
We've got, of course, healthcare, education, retail trades, public admin, as well as you got the mining side of it as well, and there's agriculture out there as well. So it's quite diverse.
When you say mining and 15,000, I hear very small, very risky. Why is it not risky?
Well, if you look at the past history of this town, it doesn't go backwards. Like it's gone sideways and gone a bit, slightly, your 5%, reduction in price.
Yep.
But it's not like those mining towns where you see it goes boom and bust.
Okay.
Where it gets a 30, 40, 50% growth from 1-2 years and then it drops down and goes back, by 50, 60%. It's a very stable market. It's got a very diverse amount of jobs and employment. And majority of people that live in that area and work in that area are not working in the mining sector. So it does, of course, mitigate that risk when you look at things like this.
Okay. And even being so small, what would you say to someone going, no, it's too small of a region for me?
I think you need to look at the economy. I think there's a lot of, I think we had a podcast on this, was it the last year when we were doing the 2025 best performing locations, that I gave up a lot of locations because of that's, reason of small economy, small population, it's not big enough. And those markets went on to do 50, 60% growth in the space of 2-3 years. And they're still doing quite well.
Yep.
And I was like, you know what, I'm going to learn from my mistakes and just look at what's going on here. And there's been I guess, a massive learning curve. And I was like, you know what, this is something that I've done a lot of research in. And I was like, I'm not going to make the same mistake twice.
So not throwing away a region because it's too small.
Yeah.
Okay.
Correct.
If it's all the fundamentals are there as well.
Of course. Everything needs to be there. Can't just have, big region, but fundamentals aren't in the right direction. You just give it a miss and move on. But if it all makes sense, then yes.
Yep. Cool.
And what I've done with my stuff is like I've looked at all the past locations that have done well, not well, and the ones that I've kind of flicked off and said, nah, it's not the right time, or I got scared because of the population size and all that sort of stuff. And using our AI processes that we've done and incorporated, I've tracked the patterns of what I've seen, and it's seen these patterns and it's built it, and it's been like, hey, this is a pattern of X of Rockhampton of when it comes to migration, or this is the pattern of Townsville when it came to projects, or this is a pattern of, of these other regions that we've bought in the past and regions that we've let go, and it's seen that rhythm, and it's been like, okay, this is a good market, or this was a good market, or is a good market to invest in now, or was a good market, you shouldn't invest there now, and we've used that now to our advantage to expand our our research.
I love it. Cool.
Okay.
You're calling us out of a job soon, mate. You're giving the regions away, and then you're also building an AI model to tell people where the regions are.
Hey, as long as
you're doing good. You're doing
people,
good.
It's the most important part.
Absolutely.
So
I think it is.
I think this is the last one for capital cities.
Okay.
We've done Brimbank, we've done Hobart, we've done
one more.
Blacktown. No, we've got two more.
Yeah.
Number 4, okay, on this list is Frankston. Now, Frankston,
Good region.
it's done extremely well actually in the last 12 months, nearly 20%. People hear that and go, oh shit, it doesn't mean you should not buy there anymore because it's already done 20%. I think it's still early on in its growth phase.
Cool.
At the start of 2025, I think medium house price was $750. Now it's at $836,000. Okay, $595 a week in rent, and the rental yield's actually not too bad, 3.7%. Okay, $3 to $4.5 billion of projects. 8,000 to 12,000 jobs getting created from ongoing and construction jobs. But I think it's a place that's going to gentrify. I used to ride it a lot down there, down the beach road. That whole, Seaford, Frankston and all those other surrounding areas as well. It's just going to change and gentrify in the future, I believe. For, under $1 million, depending on which suburb you're picking.
Yep.
Close to the water.
Yep.
With so much opportunity for jobs and growth, I think it's just bang for buck, especially for a capital city. I like it a lot. I think it's quite nice. I think it's changed a lot. Frankston, for people that aren't familiar with Frankston, that's not a Victorian, they'll say it's a shithole.
Very bad name.
Yeah, but it's changed a lot. Definitely has changed a lot.
Yep.
So I think it offers a lot, and I think it can gentrify. And once again, you can do the granny flat, strategy as well, and you can always add that in, or you can do developments. So I think it's a place that will be a place that's going to develop a lot, and there's going to be a lot of these townhouses or in units and blocks of units getting built in here. So stay tuned. If you are a developer, that could be a place that you look at potentially looking into.
It's extremely hot at the moment, isn't it? As in,
it's
days on market, super low. It's super
competitive. It's getting very competitive. Yeah.
Okay.
Yep.
You guys buying in there right now?
For a couple clients, we haven't done a lot because of the price point. Some clients don't want to spend that much, but we have purchased there. No, it's been on the radar.
Okay.
It started, like I said, 2025, $750 you get a house for in Frankston, South and other surrounding areas. Now it's creeped up. Now you're selling, the stuff, going for $1 million plus.
Yeah, right. And then I guess what would your thoughts be or your comments be to people who look at a Frankston, look at a Sunshine, who have got this bad rap? How do you go about ultimately saying, yeah, but so did here, or these are the facts, this is why it's going to perform?
Well, it changes. The ripple effect starts to happen where affordability is no longer affordable in your inner fringe locations in, say, Melbourne, okay? So, like, once upon a time, if you look at Richmond or Collingwood or any of these other regions that you look in the CBD of Melbourne or even Sydney, they've changed and gentrified. Okay, and it takes some time, sometimes 5 years, so 10 years from now, or maybe it's another 20, 30 years and it starts to change. And I think you just need to get past that. Like, I'm not going to live there, but maybe one day that place might change tremendously and you'll be like, oh my God, this is a place that's actually become really, really nice because of projects and investments that have been made. And it's, it's done the, appeal to owner occupiers a lot more because of that. So, Sunshine had a bad rap and it's changed a lot now. If you go down there, even
Port Melbourne, one of the most luxurious places in Melbourne. Yeah,
exactly. So Port Melbourne, I remember my uncle was telling me a story. He went down there to go buy a property and he looked at it and goes, nah, this place is a shithole. But hindsight, if you turned around, maybe that property is worth $3-4 million today.
Yep.
So, and that was a house back then. I'm talking like 90s. So I think you got to get that mentality of it's a shithole. I'm not going to live there, Frankston. Oh, yuck, this and that. But move it aside and just look at what's going on and say, hey, go. Maybe if you're going to want to drive down there and have a look at it, you'll see it's very, very it's very nice from a beach and from a lifestyle, but it's actually had a lot of investment and it's quite clean and tidy.
Cool. And there's a shitload of money going into it.
Yep.
Okay.
Exactly.
Cool. Awesome.
And you just got that as well. It's just down the road from the peninsula. which is the Mornington Peninsula. You got, your Portsea, Sorrento, Rosebud and all that sort of stuff. And that's more of a holiday retiree sort of location, but it has done well in the past, and I think it will definitely do well in the future.
Does it make the list?
But no, it doesn't make the list.
Okay.
But it's a place that it's very close to there as well. So it's got that bit of that lifestyle retirement vibe in Frankston because it's still close to that side of town as well.
And still accessible to the city, 45 minutes away, give or take. Yeah.
Yep,
Cool.
exactly.
I love it.
Okay.
Awesome.
Number 4 for regional is Ballarat.
It's a hottie.
Okay, it's a hottie. We've been buying there for a while now.
Too hot.
It's hot. Yeah, depending on what you're looking for and what you're trying to do. Median house price is at 560. Okay, rent 440, and of course the yield is at 4.09%, and that's depending on where you're buying in Ballarat.
Yep.
Once again, Ballarat's pretty big. There's a lot of good pockets and some bad pockets as well that you want to probably stay away from. There's there's some new estates in that area. You just want to stay away. There's an oversupply of property, and there's a lot of those off-the-plan stuff that's coming on.
Yep.
But in your close inner fringe, you could say CBD of Ballarat and around those outskirts are doing quite well. You're right. It is quite, it's quite hot. Should you be buying there still? I think the market has a lot more room to grow. You're probably going to spend around high 500-600K now to get a property, but with how strong the economy and what's going on, migration is on doing quite well and it's improving a lot. I think that's a place that could reach $1 million one day.
Cool. Why are people moving there?
Just a broad range of opportunity of different types of sectors, from retail, hospital. It's got the hospitals are probably one of the big ones there too. Educational sector as well. A lot of jobs in that diverse from the government roles, but also the private sector as well. There's a lot of opportunity there as well, and I think it offers everything that you want in a city.
Okay.
It's a regional town, but of course you got your pubs and there's some clubs and bars and all that sort of stuff too.
Yep.
But as well, you got the lakes not far from there, and people want to go aqua sports. But then of course you want to come in and go down to Geelong. It's just down the road from Geelong. You can go to the beach and it's not too far. It's actually not a bad drive compared to if you live let's say you live north of Melbourne. Okay, you want to go to the beach and you live in Craigieburn or something like that. Yeah. It's going to probably take you longer to get to the beach from Craigieburn in Melbourne, or compared to driving from Ballarat to Geelong potentially, because of this, there's going to be less traffic and you can just cut through.
Okay. Why do you say that it is too hot? I said it was too hot because I know what's going on the ground from our guys. What does too hot actually mean? And how can someone or the viewer actually go, oh, this might be too hot?
How many offers are being put on?
How many offers on the property?
Yeah. You can see anywhere from some places, some properties, and depending on what it is, it can be 10 to 20 offers on, sometimes even higher. And if it's a really desirable home, depending on what price point and what you're looking for, you might be able to snap that up because, I think there's probably a lot of investors there at the moment at the lower price point. So that's going to be quite hard to get something at that cheap, affordable rate that's starting to push up. And the high-end stuff is pushing up and still pushing up, but of course it's more attractive to owner occupiers as well. But with all the momentum and all the money getting spent there, I think there's nearly going off here, $25 to $30 billion getting spent in Ballarat. So 8,000, 12,000 jobs ongoing and under construction.
Huge.
So there's a lot there. People might argue and say the commute from Melbourne to there, there's that. Yeah, I agree with that. Of course, it's always going to have that, but of course, it's got the internal migration and the population growth is growing still, and it's moving in the right direction and it's changing. So the supply is low in certain areas, and I think it's just only going to get better. Okay,
it's hot. It's hot for us, so it's hard for us to secure stuff there. Doing it on their own is going to be even tougher. But okay, let's round it off. The fifth and fifth.
Fifth, Hume in Victoria.
Gotcha.
Okay. Median house price is $700, $540 a week in rent, 4% rental yield. Hume, it's a big LGA from Sunbury to all the way to Broadmeadows to Coolaroo and all those areas there. I think Craigieburn's in there as well. People that are familiar with Victoria are probably going to say, "Oh, who wants to live in Broadmeadows? Is a shithole, very rough." I think Eddie Maguire grew up there, or West Meadows he grew up in, one of the two.
Got no idea.
But it's an area that will change. I think it's affordable. Number one, it's affordable for Melbourne. medium house price 700 grand.
$700,000 cheap.
I know, and there's a lot of people buying stuff there that you can add that granny flat potential in that area because it actually goes a long way. And once again, $450 a week in rent. You might even be able to get a little bit more in rent depending on the size and the quality of that. And that's going to create that property probably neutral, if not positive.
Yeah, there you go.
In those areas as well. And there's some big blocks as well, when it comes to that, the Hume region in those areas there, the suburbs, big blocks there. There's a lot of opportunities to put those granny flats on.
Cool. What's driving it? Why now? Broadmeadows is notoriously the worst region in the country, or one of.
Has the stigma of that.
Has the stigma for sure.
Definitely.
Why is that, and why would someone now go and put their money there?
I would say it's probably not the worst suburb. You'd say in Victoria. I'd probably say most dangerous would probably be Dandenong or Melton or something like that. But it doesn't have that rap as bad as what it used to.
Correct.
I think it's changed a lot. I think there's a lot of things have changed from gentrifying from, the inner fringe when it comes to your Moreland or your other regions from the Moonee Valley that's got really expensive now, and they've pushed the ripple effect back, and it's more affordable in those outer fringe suburbs.
Gotcha.
And it offers that still, and so you still have that gentrification. For some people, they wouldn't want to live there. Some would, but of course, you still need. It's got a rental issue shortage, and the listings are just dropping and dropping and dropping. And with the amount of projects and things that are going on there, it's helping it. It's driven by a number of things because it's so close to capital city. Like there's multiple things driving it, and people commute a lot from there to other places around. If it's in Melbourne or if it's out of Melbourne, they got that opportunity to drive in and out.
It's 30 minutes to the CBD.
Yeah.
Okay. Cool.
But there's a few places you probably want to just watch out from newer states. From look at Sunbury. Sunbury's great. I think Sunbury was on fire at one point, but now Sunbury has an oversupply of property from the newer estates that are getting built. Craigieburn and some of those other areas there that can same thing as well. So just something to keep your eye on. As well.
Cool.
Okay.
Give us the final regional.
And
I'm going to test you on all these things as well. So we're going to do it at the end of 2026, the top performing. We're going to get up this potty and we're going to see if your prediction was correct.
I think we've got another one we got to do as well. I think me and Carl done one, and I think it's in my calendar to do an update on that one as well.
Okay.
It was a prediction or one of these type of podcasts.
Hold you accountable on that, Carl.
Well.
Yeah.
My last one is Devonport, Tasmania.
That's a cracker.
Okay. 550 is the medium house price, 480 a week in rent, 4.5% yield. Okay. 10 to about $12 billion of money spent on projects, around 20,000 people in the area in the LGA, and it's about 2,000 to 4,000 jobs created from ongoing and construction jobs.
Cool.
We've been buying a lot there.
We have.
I think it's where the Spirit of Tasmania, docks from Geelong. It used to be from Melbourne. They used to leave from. And so it gets that tourism of people coming on and off the boat every single day, flying in as well. It's actually quite a nice town, industrial, a lot of big industrial complex as well, and then the port as well is a big contributor to the economy as well. So has a lot of that as well, and hospitals, schools, and all the other things that we always ramp on about and talk about. It has everything. It literally has everything. It's actually a very nice town, to be honest.
Right.
And I think it's still affordable, and it's that as well, that keyway where it's like, okay, we go from Devonport to Launceston, and Launceston to Hobart as well. So it's got that trucking route, and the logistics and warehousing is very big there as well. So it's something as well for people that look at for commercial, can be even a great place to look at. I've got a commercial in Burnie, which is just down the road, but with the docks and the shipping and going on there, there's a lot of, that brings in a lot of work as well, and with storage and, like I said, logistics. But like I said, there's a lot of trades and a lot of opportunity for trades down there, for any type of trade industry, for if it's Devonport or Burnie as well.
Cool. And you said that you guys have been buying in there, not too hot.
It's hot. It's hot. It's getting hot.
Starting to heat up?
It's starting to heat up. It's getting really hot.
Okay,
But
cool.
it's still some great buying there, and I reckon it's still affordable. When you look at income to property prices, I think it's 7 to 8 times.
It's decent.
So it's very, very affordable. Like you look at parts of Melbourne and Sydney, it's anywhere from 20 to 30 times the income for house prices. And that's why some of those house markets or those markets don't move as aggressively in price, because people just can't afford it.
Of course.
And so some of these capital cities, I think that's one of the big factors that are factored in, is that your house prices are very cheap. okay, and in that area, and incomes are quite strong.
Yeah.
So house prices can keep moving.
Yep.
As well. So it's one of the things that we looked at here with this research.
Cool. I love it.
Yeah.
I love it. There's the top 10. That's a hot list. I'm very interested. We're in January. Come December this year, let's see if we had 15 and we've got the median prices. Let's see if it's grown.
Yeah,
I've got
definitely.
confidence. You did it last year. Let's see if you can do it again.
Let's see what we can do, because I'll be interested to. There's a few more on that list that I had. I had about 20 to be honest, and there's more. I can always get more to be honest. And I was like, okay, well, I'm going to give 10 because if we give out 20, it's going to be too long. But people that are listening to this and they've stayed till the very end, okay, we actually are creating something here for you where we're going to have a document of these locations, a bit of a brief summary of some of the property metrics, why, about what we think about the economy, where it's heading. And it's going to be a document that we're creating and we're going to give for free.
I love it.
Okay.
Stay to the end and that's what happens next time. I like that.
So yeah, I think that's going to be awesome giveaway. Okay. And that's going to, we can review that and we say Frank's flunked it at the end of the year, or if he's actually, he's delivered on his promise.
Yep.
But let's do that at I reckon November, December this year.
Okay. I'm cool with that. Once again, thank you. You're almost pulling us out of a job. Thank you everyone for staying. You get your free goodie, which is that nice document. That's see if what you've said here is complete crock of shit or good. Go for it.
And lastly, if you found this valuable, give this podcast a like, because then it just means that we're seeing people like this. They're getting more value from it. We can do more content on this and actually reveal other things that are very similar when it comes to location research, whatever it may be. So please give this a like if you found this valuable.
See you next week.